the global author we're all here to listen to. Ruchir Sharma, you all know him. I think the last time we did Adda with him, I think was 18 months ago in Bombay. And, it's always so much food for thought that comes out of it. But today I think is more special because of the gentleman sitting next to me, Mr. Kamath. I think everybody here is very familiar with and knows. He's influenced policy in India, for longer than I've been born, I think. So I would, and Mr. Kamath was born in 1947. Ruchir, I think, is sort of came of age after reforms in India. So I think it's just this dynamic is very special, and I'm looking forward to this conversation. It's very, very special. I've read the book, so has Mr. Kamath. We spent half an hour proving to each other that we have read the book, every page, and it's a great book. The thing about Ruchir's books are, I think that he has a great way of his titles are always outstanding. Ruchir, you always catch a pulse. Just when I think we're thinking that this is a trend, your book is out, and it's kind of just underlining that trend. I remember we were all thinking, is something changing in the world order, and then Breakout Nations came out. And now we're kind of thinking what's happening with capitalism and this. And you announced the book's name at our last Adda for the first time, so I remember that. So I want to get into the book, and there's a lot to talk about. But I just thought, before we get into the book, can we start talking about something else you wrote 2 days ago? You wrote a column, like you do often, where it was revelatory for me, where you argued that the rest is back. The countries that we didn't expect have suddenly come back and have are now where all the action is. You essentially said that 88% of the emerging countries in the world are growing their per capita GDP at a faster rate than American per capita GDP is growing. So the other countries of the world are back, which we kind of, and people are not noticing that. So can you just unpack that for us a little bit before we get into the thick of the book?
Yeah, sure. So if you may recall, I wrote my first book, Breakout Nations, in 2012. At that point in time, the thesis of that book, of Breakout Nations, was that all these BRIC nations, which were the rage at that point in time, I had argued that a lot of it is hype. And I'd made the bear case as to why Russia, Brazil in particular, would fade from the scene, why China's growth was peaking. And I'd given at that point in time a 50% chance for India also to be a breakout nation. At that point in time, remember that we all thought that India could grow at 8% or more. A growth rate of less than 8% in India was considered heretical in 2011 and 12. And I had gone through the entire emerging world. It was an economic travelogue, and it ended that book by saying that it's a complete myth that the emerging world will inevitably catch up to the developed world, because that was the conventional wisdom at that point in time. And I made the point that the true breakout nation of the world of the decade is going to be America. That was the 2012 book. I wish I had invested my career accordingly, because there's no place where as much money has been made as in America over the last 10, 15 years. It's really been the comeback nation or so. So that's really what I had written in that book. So it was a bust of the emerging world is how I had written that. Fast forward now, what happened that the last decade or 12 years or so has been pathetic for emerging markets in general. In fact, the only, in both growth terms and in equity market terms, because normally when you start from a low base, you're theoretically supposed to grow faster, right? Because that's the whole thesis, that your base is low, so you can carry out some reforms and keep growing faster. So by definition, emerging markets should generally grow faster than America does, because America is a very developed country and stuff. Yeah. And yet in the last 5 years or so, less than half of the emerging markets grew up their per capita income at a pace faster than America. One of the most disappointing periods that we have seen in economic history. And for that reason also, is a reason why the stock markets in the emerging markets in general have delivered such poor returns for the last 10 to 15 years. And India, I know we all sort of feel what's he talking about, because India's had this incredible stock market run, but it's been the one exception to a general rule. So that was the arc I'm laying out, but now I feel for the next 5 years, the rest are going to rise again, because these countries now are in a much better position over the next 5 years.
Who are the rest?
So the rest, like for example, if you look at the world today, about 80% of the world's population is concentrated in the emerging markets. These include everything from Indonesia, Philippines, Vietnam, Brazil, Mexico, China, even Korea, Taiwan are counted as emerging markets. So you got everything apart from the developed countries. In fact, there are 200 countries in the world today. Only 40 of those countries are classified as developed countries. The 160 odd other countries are classified as emerging countries, and many of them have been emerging forever, right? Brazil, Mexico, they keep emerging, they never tend to sort of break out. So the whole thesis is the fact that these countries have had a very poor period for the last 5 to 10 years for a whole bunch of reasons, including a big hangover they had from the boom of the 2000s, and that now they're in a much better position, having cleaned up a lot of the balance sheet with lower debt and also much better current account, fiscal accounts, and they're in a position now to grow in a much more strongly compared to the United States, which now seems to be suffering from some of the same hangover that I had said the BRIC countries were suffering from after the big boom of the 2000s. So it's a role change, and that's what the piece I wrote, that the world should take note. The rest are rising again.
And when you said the United States is doing the same thing, that the mistake of the emerging markets, you say that the fiscal deficit as a percentage of GDP in America is unsustainable. What happens if America continues down this path? Well,
if something can't go on forever, it won't, is my basic thesis. But the whole idea is the fact that America today, I've been a big fan of America. I live there, that's where I'm based, and there's a lot that country has to offer. But I feel that in the last few years, they've been using an incredible amount of debt to grow. In fact, the amount of government debt that America has taken to grow and to achieve the growth rates that they have done in the last few years is exceptional. Typically America would run a fiscal deficit of about 3% of GDP. Now, in the middle of an economic expansion, they're running a fiscal deficit today of 6% of GDP. Their debt to GDP today is the third highest of the developed world, and it is on track to even beat Italy with the second highest, with only Japan likely to be higher by the end of the decade. So this is a path, and there's a lot of arrogance bordering on complacency which has crept in there, that it doesn't matter. You have a presidential election going on there, and both the candidates out there are talking as if all these things don't matter. We are America. We are the world's superpower. We can, we have to fix a few things, but we can get away with spending and cutting taxes and whatever we want to do. The kind of policies which in emerging markets we would freak out of, that how can you cut taxes and increase spending when your deficit is already so elevated? So I think that's the problem that I have with America today. But the whole thesis of the book, which we'll get into, it's not just about government spending. It's a suite of government habits. What's happened to capitalism today? Why have so many people in America today lost faith in capitalism? Why are we at a place today where more than 50% of the young population in America, particularly Democrats, say they would rather have socialism than capitalism? This is coming from the beacon of capitalism, where there's been that at one level America has done at the surface quite well over the last decade. On the other hand, there's obviously it's not working for the average person, where most Americans today are saying they would rather have socialism than they would have capitalism. That's a telling statistic. So the book is really an examination of that what went wrong with capitalism? Why have people lost so much faith in it? Why do today 2/3 of Americans today say their country is moving in the wrong direction? And then obviously it's like if the book's journey begins with India, which is that we grew up, as you said, in the 1970s and 80s, at least I did, and the whole issue there being that we have lived through a socialist past. We know what that's like. And at a very basic level, I want to sort of show in the book what was socialism like and what's the essential difference between capitalism and socialism. For me, capitalism is what? It's about the fact that the individual has the power to make decisions. The individual has the responsibility and the authority. So it's about giving people economic freedom. Socialism is that the government decides for you as to what needs to be done. And in America, most of the solutions they look at today involve more and more government, whereas I argue in the book that's been the problem in the first place.
Right. So, Mr. Kamath, come in whenever you'd like. I'll just, coming back to that, the main piece that I think everybody wants to kind of know. So are you now, again, you're betting on emerging markets? I know that you've always said America, that India, in the last Adda you said India is the most expensive market in the world. Is it still the case? Would you still think that is India a good buy today? Would you advise that, given all of this?
Yeah, I mean, so in terms of even I said back then that these traditional valuation metrics aren't working in India. So India still sort of seems to me like to be on the, broadly, I still feel India is on the right economic trajectory. So I don't have a problem with the market, except the fact that I find much greater value in some of these other emerging markets, which have been totally beaten down and trade at a fraction of the valuation of India. So I still like India, but I feel that in terms of to the extent, now, it may be a bit early to talk about terms like diversification and all that, but to the extent you can, some of these other countries are finally staging a comeback and they trade at much cheaper valuation. So for me, that is a more exciting opportunity at this point in time. But India, for me, still, as I said, my heart lies here, and I still feel the fact that the market is so big, so diverse, that will always remain a cornerstone of any emerging market investor.
Is it still overpriced or not?
It's always been that way.
Okay.
So it's like always, India's always traded in a different thing. In fact, when I speak to some of my team members and stuff, when we, like the same stock, it's like, I talk about these examples. I joke, in fact, with people like, even people like Sunil Mittal and all, that they have two businesses. They have one business, Bharti Airtel, and they have Airtel Africa out there.
Right.
The growth rates are roughly similar, but one trades at 4 times the valuation of the African operation. So it just tells you about what premium people are willing to pay for being in India. So that's an exceptional case as far as India is concerned. But isn't it telling? Two businesses roughly similar in terms of their growth rates, at least in local terms. One trades at 1/4 the valuation of what an Indian company trades at.
Sure. Mr. Kamath?
Yeah, thank you. Ruchir, compliments on, again, a book which makes you sit up and take notice and, of course, read it thoroughly. What struck me is you briefly mentioned about the deficits, particularly in the West. And you have then linked it to two things. One is bailouts.
Yes.
And then this poison of low interest rates. And thirdly, consequent to that, my reading, you have zombie institutions. Would you like to maybe spend a little time on this whole concept of zombieism and where will it go? And add to that the fact that if the dollar is no longer going to be, in a few years from now, the currency of choice, like you have traced, all over Europe you had some 5 or 6 reserve currencies come up over the past few centuries. What happens? All these deadly mix with the currency getting weaker.
Yeah, sure. So just a couple of things like concepts I'll speak about. One, that I think that what is capitalism, as I said, right? That capitalism is about giving people economic freedom and keeping the role of the government to the bare minimum. Limited government is what America was always built on, and that's a path that they have deviated from. I still sort of feel that there is a role for government, that it has to be. But you asked specifically about, for example, bailouts. And here it's so interesting how capitalism has evolved. In America, right up until 1980s, it was considered absolutely sacrilegious for the government to bail out private sector companies in America, right? And then in 1984, you had the first big bailout of an American financial institution called Continental Illinois. And from then onwards, you've had bailout after bailout after bailout, each one getting bigger and bigger with time. And most gallingly, now you have preventive bailouts, which is that last year, as you know, that the Silicon Valley Bank almost went bust. And there was a bailout of that as well last year in terms of that. So now it's become the fact that no one is, it used to be that institutions are too big to fail. Now it is that you're even too small to fail, right? That because if something happens, you're so fearful of the contagion it will lead to down the system. So one is the bailout culture, which has crept across America. The second, you spoke about zombies. And what exactly do I mean by zombies? It's a great sort of, term out here. So it became very popular in America, in Japan, in fact. It was coined in America by some economists in the late 1980s. In the 1990s, the concept of zombies became very popular in Japan. These were companies, when the Japanese economy was declining rapidly and going bust, these are companies that did not even earn enough interest or enough profits to cover their interest payments for 3 years in a row. They were dubbed as zombie companies. The American media at that point in time, and I trace this in the book as well, would sort of, show the fact that this is happening in Japan, and they would mock it, that this is America, we don't do this zombification of capitalism, as they put it. So at that point in time, the number of zombie companies in America was 2% of the total. Today, in America, by some measures, 20% of all listed companies in America can be classified as zombie companies. So is this capitalism again? What's the consequence of this? If you keep alive so much deadwood in the system, it's very difficult then for new entrants to come in. And that's what's happened in America, that at the bottom you got this zombification, at the top you got these oligopolies, and that's happened because of another government intervention that I trace in the book, where you have too much regulation. And I think this is a very important point which in India also we need to understand. Regulation, when you do, is by definition helps the incumbent and helps big businesses. Why? Because big businesses can afford to have lawyers and all other legal, people around to deal with the regulatory environment, because the cost of complying has gone up 10 times literally over the last 20 years. And secondly, when you have regulations, it is the big businesses that are able to lobby and have regulations written in their favor. So what I've shown in the book is that some of these perverse outcomes we've seen of capitalism in the West here today, of too many oligopolies, because capitalism should be against oligopolies. Because capitalism is what? That if somebody makes too many profits, some new entrants are supposed to come and take those profits away when you have a freedom of entry. But if you have too many oligopolies, shows something is wrong with capitalism. So these are all symptoms to me of what went wrong with capitalism. And I argue that how the role of government has played in terms of creating these symptoms, whether it's oligopolies, and what are the government policies? Too much regulation, bailing out companies, which leads to also zombification, the poison of low interest rates. These are some of the policies which have led to these perverse outcomes, and why the average person in the West in particular, is feeling so miffed by the system, and you have a great anti-establishment feeling.
I think you clearly brought out your thoughts in the book, but I want to just put what you just said in your words. You put in context. You used the phrase socialism for billionaires. And again, I found that to be fascinating. Again, the bailout and things like that. But could you explain that to our audience? Because that is going to be very interesting.
Yeah, so what I say in the book is the fact that what we have today is, what Bernie Sanders of all people, I quote him, and this is the irony of it, because he's a self-avowed anti-capitalist, he calls himself a socialist. He sort of said that what we have in America today is socialism for the rich. And I said, yeah, I have some sympathy for that argument, except the solutions you're offering are exactly what helps these rich people, which is in terms of having too much easy money and stuff. So what I've said is that the concept of risk in America has been socialized, which is on the upside, it is capitalism. On the downside, it is socialism. And what exactly do I mean by this? So, a very important thing happened in 1987. So this is one of the other myths, right? Which we speak about the 1980s as this era where it was a big sort of takeoff in free markets, Reagan, Thatcher revolution and all going on. And as I argue in the book, that in 1987, in the middle of all this, one very important thing happened. The stock market in America crashed by 20% on a Black Monday, as they called it. When the market crashed by 20%, For the first time then, the Fed chairman, Alan Greenspan, intervened to try and push the market back up. He cut interest rates, intervened in the markets to put. First time the US central bank intervened to push the market up. That came to be known as the Greenspan put. And after that, this feeling sort of emerged, which was true, that on the downside, the central bank's there to help you in terms of that. On the upside,
It's all for me.
it's all for me. That, so it's capitalism on the upside, socialism on the downside. Now, that's not what capitalism is supposed to be.
Just another point that related. If the dollar loses its prominence, what happens to what has happened, the situation in the US with the deficits and the zombies and so on?
So this is a very long process, as I sort of argue in the book, that if you look at the history of the world, every 100 years or so, there has been a new reserve currency. What really is a reserve currency? A reserve currency is a currency which is commonly used by everyone for using their transactions, and the country which has that reserve currency has one big benefit, that other countries are forced to hold that currency. So they're able to fund their deficit more, and they have an advantage in general by having a reserve currency, right? So for the last 600 years or so, as I trace in the book's history, that every 100 years there's been a new reserve currency. It's never been permanent. So before the dollar was the world's reserve currency, for 100 years before, it used to be sterling. Before that, the French franc. Before that, the Spanish currency. Before that, the Portuguese. And before that, the Dutch. That's the history. And every 100 years. Every time, too much debt, in the end, sunk those reserve currencies because the world lost confidence in holding that. That's what happened to the UK also after the two wars they fought and the empire was overstretched. That's what happened to UK in terms of it, and the dollar took over. The good thing about the dollar today, the great benefit it's had as to why this reign seems to be lasting longer, is that there is no competitor in sight. China could have been the obvious competitor, because but the great irony here is that even though the China's size in the economy global economy has increased dramatically over the last 30 to 40 years, because it is a largely closed capital account, and people don't trust a currency still backed by a communist party, in terms of that. So the Chinese currency has not been able to gain much share out there. Similarly, Europe could have been a contender. At one point in time, the euro was considered like a great currency. But even there, Europe's been, as I argue in the book, that capitalism is in worse shape in Europe, right? So therefore, Europe has also not emerged as a contender. This has given the dollar a much longer leash. But we're seeing signs of cracks emerge. How is this happening? Two things are going on. If you look at the central bank reserves of the world, there are two trends which are playing out. One, that they're buying a lot of gold. So now so the share of dollars in their foreign exchange reserves is coming down, and they're buying lots of gold. That's a very new development, because they haven't bought gold in such size in a long period of time. The second thing is they're buying smaller currencies, Swiss, Australian, some of these, they're buying that. So it's a death by 1,000 cuts. It's a very slow process that's likely to play itself out. But if the US continues to behave this way, and I have said so in the past, the single biggest mistake that America made, according to me in history, and these things take time to do, was the way it imposed financial sanctions on Russia. Because the dollar is still the world's reserve currency. But the way it imposed sanctions on Russia for the first time, where it threw Russia off the entire financial system and said, off you go in terms of that, and they seized their foreign exchange reserves, which were lying in foreign accounts, that sent a real chill down many central banks around the world, many governments around the world, who said, if this can happen to Russia, this can happen to us one day. And that is if you look at the point, the acceleration in central banks buying gold, central banks buying Swiss francs, it began from March of 2022, when this action was taken. So these are all things which take a long period of time. We're talking about 100-year history spans here. But I'd say the process of chipping away, and that has begun. And one of the key things I think, in fact, for now, which will also help the rise of the rest, is that a strong dollar tends to help America, but a weaker dollar in terms of helps more capital move to emerging markets. So I fundamentally believe that emerging markets are going to benefit from a weaker dollar over the next 5 to 10 years. And one of the more controversial, provocative sort of things that I said, someone asked me this question the other day, that where do you think the rupee is headed? I said rupee is 84 today. I'm willing to bet that the next move in the rupee is towards 80, not 90.
that's okay. That is a that is a provocative thing to say. 'Cause that's not happened ever, right? I mean,
It's happened. I mean, in the 2000s as well.
2000s.
Yeah, I mean, the rupee also, I mean, the rupee, as I
10%
said.
strengthening.
Yeah, and the rupee
10%
strengthened. I mean, we're used to a weak rupee.
Yeah.
And in fact, as I said, for one of the fun that, like the rupee, in terms of since independence, has practically lost 1 rupee a year against the dollar.
Yes.
Right? We began at
Yes.
4, and at 75 years of independence, we were close to 80.
Yes.
So it was like one a year. So we're very used to a declining rupee, which is true. But there are phases, and I think the only distinct phase was the 2000s, when the rupee for a while did tend to appreciate somewhat. And it's quite possible that from here it could. But again, I think some of the emerging market currencies could appreciate more significantly. Even the euro is at 112 today. If I were to say, go and have your vacation in Europe today, because I think 2 years from now, the euro could be 120, 130, and it'll be more expensive.
Yeah, I just wanted to follow up on that. This is fascinating because you're saying you'll see the rupee at 80. I actually would say I would not bet against you. I think if you look at the past few years, it's always been perception that rupee is too strong. We need to not let it get stronger. At all points in time, that's the and that I think in a way has also held back our own growth. And considering what's happening, the rest are not doing as well. We are doing better. I heard you say that 6% is what is doable. Yeah, that's, we can probably think about that later on. But even with that 6%, the rupee should get stronger, while others are growing at near zombie rates.
But inflation is what matters. I think that the one good thing is that as long as we keep our inflation under control, this can happen. So I'm assuming that we'll keep our inflation under control.
At some point, I don't know to divert from your book or distract from the book, but since you mentioned this very important, I call it a triumvirate: inflation, interest rates, and growth, and what happens to it. You know the Japanese story: 8% inflation and interest rate, and growth, then started zooming. I'm talking about 70 to 95. China, similar story: inflation 8%, interest rates 8%, around 2000, and then we see what's happening. When will that happen to us?
In terms of our
currency strengthening, interest rates coming down, and growth accelerating, and you adding more to your muscle, as it were, as a nation.
But I think
strength.
Two things here. One, in general, I believe that that if the dollar weakens, as I predict, we will get more capital flows, which will help us keep interest rates somewhat lower than they are today. So that's one aspect of it. But I think that we have to keep in mind about one thing, that China is a country on which, as you know, that even though I turned bearish on China a few years ago, and I've written extensively about China, for 30 to 40 years, China was the world's biggest success story. It didn't happen naturally. The kind of reforms that China carried out in those years is something our polity I don't think is capable of carrying out. Like China, I mean, you've lived there, in terms of the transformation, what took place in China. For example, like China began as a very controlled communist state back in the 70s, and then it gave its people a lot of economic freedom over time. I mean, in China, Chinese people couldn't even own their own property until the 1980s or so, and then all the reforms began one by one by one. And the kind of reforms that China carried out, for example, one thing which I quote all the time, is that in the 1990s, China fired nearly 100 million people in its public sector enterprises. And there was no welfare state. They said, listen, you go find your job where you have to go to the eastern seaboard where the exports are, go and do it. So that is the kind of reforms that China and other Eastern European, East Asian countries carried out by really downsizing the public sector and doing that. I don't think we have the capacity or the consensus to do that. I mean, privatization in this country is dead on arrival for most things, as we know. It only happens by malign neglect, right? Which is that something is allowed to privatize on its own because the private sector takes on greater share. You know that in terms, that's what happened with the banking sector as well. But so I think that we can grow at 6, maybe 7% or so with some help of foreign capital. But the kind of growth rates that China did, which you spoke about, 9, 10, 11, I don't think our polity and the consensus in this country is there. And we still don't give our people enough economic freedom. We still have a mindset of the fact that we need to protect, we need to sort of do that the government still plays a pretty interventionist role in this country.
I want to push 2 points related to this, otherwise we'll lose a thread on this. Again, fascinating thoughts. In the book, you mentioned economic freedom and political freedom. You, in a way, just now mentioned to it. Maybe a little sketching of that so that people keep it in mind.
Yeah. So, as I say in the book, as well, that for me, in terms of what I found very ironical about India, it's a very basic point that struck me as I was growing up, that we gave our people so much political freedom at an early stage, but we never gave our people economic freedom. And that was, came to me because I lived in Singapore for a few years. I was in the 1980s in Singapore. I went to high school out there. And Singapore was like booming back then. Even though it was a small country, but it was sort of what was happening across East Asia. And it really occurred to me that we just haven't given our people enough economic freedom. Singapore never gave its people much political freedom, like the kind that we got, but it gave its people huge amount of economic freedom. So that's the irony which struck me, that for me, and America, for most of its 300-year history, and as to why it, for me, was such a successful nation, it gave its people both political freedom and economic freedom. Most countries, what happens is they first give their people economic freedom, and then when they reach a certain per capita income, then they start to give their country more political freedom. That's been the normal progression of countries around the world. China's trying to define it now. Singapore may have defined it, but most countries, Korea, Taiwan, all these countries, Greece, so many countries first gave their people economic freedom, but never gave its people political freedom. In India's case, we did the opposite. We gave our people lots of political freedom. We never gave our people economic freedom, which began to change from the 80s and early 90s or so. So I think that...
Closer.
Sorry, closer? Okay. So I think that's the big change in India, which we have seen since the 1990s. And now we have seen that India also has progressed a lot as we have given its people economic freedom. But it's interesting that India still ranks relatively low on the index of economic freedom compared to so many other countries. So I think that's the thought that I was trying to do on those two concepts.
No, Ruchir, in the book you've said that democracy and capitalism kind of go hand in hand. But all the examples you're talking about now, Singapore and China, show the opposite. And when you talk about things like privatization and the polity not having the will to move to a 9%, you're almost saying that democracy is coming in the way.
No, I think what I'm saying is this, that for me, America was the great beacon because it gave its people both political freedom and economic freedom. And I've said that if you look at all rich countries in the world today, right? I said there are 40 developed countries in the world, barring one or two, they're all genuine democracies. So for me, both economic freedom and political freedom eventually are soulmates. The journey to that, as I said, in most developing countries, people have first got successful developing countries, people have got economic freedom first and then political freedom. But I would just say one thing, that for every country which has done so well, like China, by authoritarian, or even Singapore, yes, there are 5 countries in Africa, Latin America, which are authoritarian and have done really poorly. So there's no guarantee that authoritarian will lead to economic success. But I say eventually, if you want to become a successful nation, you need both economic freedom and political freedom, and you may have one or two exceptions. But for better economic results, in the first stage of development, most countries have generally got economic freedom first, followed by political freedom.
So I think that China, Singapore, and I think almost all of the Middle East is actually proving, or is kind of proving the opposite, right? They're trying to prove that you don't need the political freedoms to be a successful capitalistic society. I mean, does that, and they are sounding fairly successful on that journey. So I think maybe if we can kind of talk a bit about, are we all on the same page about what success even is? Do people, like, is it just more income? Is there something beyond just income that make people feel successful?
Well, I think there are cultural factors involved here as well. But I'm saying that we have to see whether China, now what happens to China? Does China get stuck in the middle income trap out here, right? Because its growth is struggling now. This great economic China boom that it's had, it's come to an end. So will China be able to succeed, or under Xi Jinping, with too much authoritarian rule, is China going to regress from here? So I think this debate is unsettled currently.
And Singapore has been going strong.
Yeah, Singapore is going strong, but Singapore also now is become much more democratic compared to what it used to be. In fact, the opposition in Singapore and all now have been making gains as well, and Singapore is a small country, but all the other East Asian countries now are genuine democracies. Korea, Taiwan, Indonesia, all these at one point in time were authoritarian regimes. They've all become democracies now.
I think yours probably is the first book which is so directly titled, What Went Wrong with Capitalism. But if you go to any bookstore, you'll see plenty of books about what has gone wrong with democracy, what is going wrong with democracy, why democracy is not going to recover. That stream is kind of well flushed out. Is there actually a correlation? Like, do you think democracy is doing badly and therefore capitalism does badly? Is that something that is there a connection there?
I feel the opposite. So in fact, as I argue in the book as well, that the last 20 to 30 years, so this is like an interesting, I think we spoke about in the past as well, that something has happened in the Western world. If you look at the polls as to why people are so unhappy today, as I said at the outset, with the economic results that you're getting. And it's correlated with one thing else, as I said here in the past also, that there is a unique term which was developed in India. It was called anti-incumbency, which some of our travel companions, in fact, came up with, and all that. The term anti-incumbency is an Indian term. It was not, as I mentioned, that when I would first write about it for, like in the Western papers, they would like, the editors at the New York Times would ask me that, what are you talking about? What is this term? And stuff.
And you would say you wrote this thrice.
Yeah, in terms of that. So like I would write about anti-incumbency, and it was a uniquely Indian term because India had anti-incumbency. In the Western countries, most governments would win re-election, right? If you stood for re-election, you would win. That was the thing. Last few years, most elected leaders in the West, when they stand for re-election, are losing re-election in terms of that. So for this year, if I were to say what is the phrase that I would say is the phrase of the year, and I'm hoping that I can use it by the end of the year, global phrase, if I were to write, it'll be anti-incumbency. So the Indian trend has gone global, which is this anti-incumbency has become a global trend. So why has this happened? I argue that because of the distortions caused in the economic system, because of the fact that the average person in the Western world is feeling that the system is rigged, it's not working for them, it's become socialism for the rich. It's in terms of that. That's why I feel that people are so disaffected with what's happening. So that is the reason I've said this.
But is it people, the anti-incumbency, as you're saying, but to what degree do people know what they want instead? I mean, you're saying that in America, a lot of young Democrats are asking, they want socialism. But that's just, again, that's like you've argued, like the data versus the debate and the rhetoric. I mean, are they actually proactively voting for socialism as much as they're actually voting against capitalism? To what degree is
they're
that?
Voting anti-establishment.
Right.
So they are like, in terms of the fact that they want something new, they're voting anti-establishment. The current system is labeled as capitalism. So the natural thing is to revolt against the current system. So therefore, what I've done in the book, and this has been my small sort of ambition with this book, is to at least say the first step to a cure is to diagnose the problem. If the government's been the problem for you, at least let's detail why it's been the problem. Let's change the narrative. And I was very happy to see the reviews the book got there, because most people say, this is the first book making that point. Until now, most books and most narrative is that the government needs to fix this.
Yes.
The government needs to sort of, intervene to make sure housing prices aren't that high. The government needs to, come and do X, Y, Z. So in that regard, the good thing I found was that it's the first original argument to say that no, the government's the problem, it's not the solution. And here is all the evidence. It's a revisionist history of capitalism. Over 100 years, this is how government has distorted capitalism. So to answer your question, the reason we have anti-incumbency in the West today, like we have had in India, is because people are dissatisfied with the economic outcome. And I'm trying to show why is this economic outcome being distorted. And please, what we have today is not what capitalism was supposed to be, what the founders had in mind. Today, in countries like France, 60% of GDP is government spending. How do you call that capitalism when 60% of the government spending of GDP in countries like France?
So okay, so many things I want to ask follow up, but in India, right, you're seeing a opposition which may be getting a little bit more popular than we kind of, just the rhetoric of the opposition getting a little more catchy and popular, which is taking more hard left turns than it did in a long time. I mean, you're talking, Rahul Gandhi is talking caste, Rahul Gandhi is talking a lot more welfare. He always spoke welfare, but he's still talking. Are they kind of just like sensing what the audience wants to hear?
I think the opposition is doing what the opposition always does,
Just
which is to be anti-government.
Anti-government.
So whatever the government has, it is. When the opposition comes to power and how they govern is very different.
Yeah.
As I've said, that if you look at the state chief ministers around the country, including the Congress chief ministers, I don't think that they're following these kind of policies in practice, right? So I discount what is said by the opposition in power. Having said that, there's no doubt that, as I answered to Mr. Kamath also earlier, that we will never carry out the kind of reforms that China or East Asia did. There's no constituency for that. But am I getting too spooked by what the opposition is saying? Not really, because I've lived through too many cycles in India to know that what they say in opposition and what they do in power is often very different.
But welfareism is something which every political party is actually racing, competing with one another for.
Yeah,
I mean,
so that's
we
the
saw
biggest
this.
risk, absolutely.
We saw this in Andhra. We were driving together through that. I mean, in Andhra, you had families that were earning 15,000 rupees a month, and they were dissatisfied.
Yeah.
And I was telling you when I was in Bihar, and I wasn't with you, I was alone in that. You had families earning 3,000 rupees who were being very grateful for earning something. So welfareism seems to be, you can't win that game.
Yeah, it's a creeping issue as far as here is concerned. And as I said that I have lots of issues with the government, which I've been very vocal about on the politics and stuff. But the one good thing the government did over the last 10 years, I will say, is that they at least shifted the balance a bit, which is the balance between 10 years ago, welfareism was getting out of control, right? But they shifted the balance back a bit in terms of more infrastructure development and less on welfareism for the last 10 years. But it never went away, but the balance got shifted. The risk I took, if I were to identify the single biggest risk to the India story for the next 5-10 years, it's this, which is that every single successful economic nation at this per capita income has spent more on building infrastructure, giving people the tools to go out and do jobs. China did that. And the countries which prematurely built a welfare state in Latin America, Brazil, Mexico, all these places, they never took off and their growth rates never did. So the examples are very clear, and the single biggest risk to the India story over the next 5-10 years is if this trend reverses back again in terms of that. So there's no doubt on that. My hope, though, is the fact that it's always in India, getting anything done takes its time. It's all very slow moving and stuff. And the one thing which at least the first UPA government was very lucky about, that they came to power, they spoke about lots of welfareism and stuff, and they did it. Luckily, our growth rate, because of the global emerging market boom, was so strong, they could afford it. That in terms of that they could afford to get away with it. By the second term, when the growth rates across the world began to collapse and even ours began to slow down, we paid a huge price for that. And remember one thing which I think that politicians in India know. We don't know whether economic growth wins you elections or not. We don't know even if welfareism wins you elections or not. It's a complicated dynamic what wins you election. But there's one thing which definitely loses you election. It's inflation.
Right.
No government has won an election in India when inflation's been high. And so therefore, I think any government needs to realize that if you do too much of this and inflation starts to get out of control, that's the death knell. So
Correct.
That's the great evidence. And that's the good thing I find about Indian democracy, that there are checks and balances in place. We have covered so many elections in India, state elections in India. The first election trip I did was back in 1998, and we went to Rajasthan and all that, and Delhi. And I remember that it stayed with me that onion prices were rocketing. And that was enough to sort of, in terms of make those governments lose. So as I wrote, that onion prices definitely make governments cry.
Yeah. But so is a 303 BJP better for capitalism than a 243 BJP?
I think that the market has given its answer, which is the fact that this is great for India. I think that I've been very proud of this election result as well, because it's given the answer to you, which is that there is a risk of also too much excessive government power, like in India. And India needs to be true to its polity, right? As I said, that another reason why India will never be able to carry out the kind of reforms that China did, because China is also a very homogeneous society. India is a heterogeneous society. I think that too much government power in India ran the risk of undermining the social fabric of this country. And so, as I have said so in the past also, that too much concentration of government power at the center is not good for India, because India at the end of the day is a heterogeneous society, it's a federal society, so a 240 number definitely has been a boost for federalism, which I feel is the path for India.
But for capitalism, specifically, for capitalism as well, you say that a good politics is going to help with good capitalism.
I'm saying that in terms of having like in India, which is loosely run, rather than run with too much central command and authority, is better for the country's economy as well. Because
and
it's
you're
too
saying
much.
this in spite of the fact that you have said in the book that India's done well, like on deficit. They've been very responsible on these things that America's done badly on. Specifically India.
Yeah.
You've called out for being very responsible in terms of government spending, in terms of public debt, in terms of inflation control, in terms of interest rates also being, So you're accepting India's done well with a strong government, but you're still saying it's good for capitalism.
I'd say like whether it's strong or weak government is not the issue. We've had governments in India back like the Narasimha Rao government and stuff, which was a relatively weak government, was forced to reform because you had so much stuff. So I don't look at that, but I'm saying that there was also a risk that a very strong government in a third term, and something which I've written a lot about, that third term governments often around the world have done quite poorly because they get caught up in their own narrative. They get caught up, they get arrogant, they get complacent and stuff like that. That was also a risk. So, in fact, one of the fascinating pieces of research that I found was that after a leader has been in office for more than 10 years, and I looked at all countries going back to 1900, all democracies, hardly any leader has had a successful third term. It's very rare. So in terms of this, something about that as well. But I'd say that, and why does that happen? That happens typically because they get very arrogant, complacent. They've got 2 terms, they're out of fresh energy and stuff like that. So we have to take that into account as well, which is that it's not like an extrapolation. In fact, because a government's first, second, third term can be very different. And so the big risk from a global experience was, a longer the government stays in power, the diminishing the returns to performance.
Right. Ms. Kamath.
Yeah, I think just before we went into impact of voting, and you were on inflation, and you have made a fascinating point in the book, that is inflation, interest rates, and asset price bubbles, and the tendency to look at consumer price without looking at asset price increases. Would you like to share or expand on this a little bit?
Yeah.
And what is the balance, and how do you find that balance?
Yeah, so I think the point that you're trying to make here is this, that I've argued in the book that the central banks around the world, their focus has historically been on consumer price inflation, which is that as long as consumer prices are relatively restrained, we can go out and stimulate and do as much as you want, right? That's what central banks around the world have had this sort of mandate. As I argue in the book, that consumer prices in general around the world have remained low for the last 40 years or so because of globalization, because of technology, right? You have so much cheap labor, cheap goods coming from China, other places because of globalization, that's kept consumer prices low. So central banks have got emboldened by saying, okay, consumer prices are low, we can now throw as much money at the system to try and promote economic growth. What I say is that what this has done instead is that it has boosted asset prices. That a lot of this money has gone into boosting asset prices of stocks, bonds, and property. And to me, this is the single most important thing. If there's one symbol of what's gone wrong with capitalism in the West, it is the fact that you have had a runaway growth in property prices. Like as I argue in the book, that about like a generation ago, it took about 3 years for a person buying a home in America to be able to make the down payment. Now, it's taking 19 years, right? So can you imagine the thing? Most Americans today in their 20s are still living in with their parents because they can't afford to buy a home. It's become that expensive. There's a real affordability crisis in America. So in terms of, you've had this massive boost up in asset prices, And then also the fact that you've had a profusion in billionaires. And one of the reasons I wrote this book also, when the idea of the book came up in the year 2020 of the pandemic, that we were all sitting at home. And we were all locked down. And the government said, we're going to just give you massive stimulus around the world. And it'll all be fine. The single biggest year when the maximum number of billionaires were created in the world was the year 2020. During the pandemic, that you had this. So that was my point, that you throw all this money at the system, and the biggest beneficiaries tend to be the rich because it boosts asset prices. And if it boosts asset prices, who owns them? It's the rich. And when you have things like, now stocks going up, okay, fine, people feel they can't afford it. But property prices also going up so sharply. In America, property prices have surged. Property prices going up so sharply really hurts the average person, because the one aspiration that people have in life is to own their own home. And in America today, as I said, most 20-year-olds are saying, we can't afford our own home, so we're living in with their parents. That feels very depressing.
Yeah, just to follow up on that. So how do you deflate this inflated property and stock and other things? Is there a soft landing, or is it going to be a crash?
No, I think that it has to be two levels, right? One, central banks have to be mindful that when they intervene and when they sort of throw so much money in the system, you are also pushing up property prices. Second, of course, goes back to my point on what went wrong with capitalism, that, somebody gave me this very fascinating statistic today, that in America today, the number of new homes being created today is the same as in the 1950s every year, which basically means that the population has doubled, but the number of new homes you're creating is still very low. Why is that? Because you have so much regulation that it's impossible to almost create a new home. And what they call out there called NIMBYism, right? Which is not in my own backyard. That every community, has the fact that, yeah, you can build a home, but don't do it in my community in terms of that. So you're almost excluding lots of people from doing that. So I think what you need is policies on both sides. Central banks more sensitive, that if you are going to throw a lot of cheap money at the system, you're boosting up asset prices because the rich get access to the finance and go and accumulate many homes. And the supply side solution needs to be, how do you do lots of deregulation so that people build? And that's one of the ironies, one of the things which I found fascinating about the book as well in the reaction to it, is that a lot of people from the Trump campaign have been, in touch and calling me and stuff like that. Okay, what are your ideas and stuff? And I say that, one of the great ironies...
Only Trump campaign is calling you for ideas.
I'm saying, one of the ironies that they've called, and I told them that one of the great things here is that your man here is a builder. Why can't he, say that his campaign should be build, right, in terms of building homes, in terms of that? What is it that you need to do to increase the supply of homes so that home prices come down? So that's what I've said is one of the things in the book that I've spoken about, that asset price inflation is terrible. And the other thing is that when asset prices go bust, then it's a real problem, because it leads to so much debt in the system. And every single major recession, you can argue, like 2008 and stuff, has not been caused so much by consumer price inflation, it's caused by too much debt in the system, and then that takes asset prices down, and that's when the economies sort of really suffer.
Mr. Kamath, I always a newsman, so whenever I think of his name, I always remember the innings he played after Lehman with ICICI. And I mean, really, he played that night watchman innings and kind of, got a lot of things on track. I mean, I can't forget that. But all these interventions you're talking about, again, like you said, they're coming from the government. So a big part what I took away from your book was the intellectual consensus is the fact that large economies need more government. And you're saying that that's actually not true. More government has caused capitalism to break up, and that's a big part of the problem. I just want to push back a little bit on that. The internet was a creation of the government. Today, they are talking about breaking up Google. At one point, regulation came and kind of prevented the growth of IBM, which kind of allowed innovation to go somewhere else. So, I mean, what are these? Are these like flash in the pans where government intervention is actually helping innovation and capitalism? Or are these actually in the long run hurting capitalism?
No, so I've said in the book as well that I feel there is a role for government. I just feel the role of government has expanded way beyond what it is. So on antitrust, I in fact think that these big companies, there's a case for breaking them down because they're earning supernormal profits and they are sort of capturing too much share out there. But as I argue in the book that, okay, fine, if you break them down today, how do you prevent new oligopolies from coming up over the next 5-10 years?
Yes.
If you have too much over-regulation which happens, then you will have some new, you'll have companies which are able to exploit that and become big again. So if you are to break them down, then also look at the root cause as to what led to the oligopolies.
So break them down with regulation and then have less regulation. To
break them down for antitrust.
Right.
But then after that, you have to make sure that how do you return capitalism to becoming pro-competition, not pro-big business? The problem with capitalism today is that it's become pro-big business. It's not being pro-competition. And there's a very important distinction between these two.
And people are voting for anti-capitalism and for anti-democracy. I mean, one sort of stream. Are people sort of? Do you see a large part of America accepting or wanting the antitrust to break up Google, for instance?
I think there's a growing movement towards that. But I think, like in America, as I said,
is that to save capitalism or to save democracy or both?
I think it's to save both a bit, which is that people on the, there's a lot of anti sort of feeling against these companies. The good news, though, there's a bit of a silver lining here, is the AI boom. And you know what I feel the best about the AI boom? The best thing about the AI boom is that it may end up destroying these big companies. Why? Because they're spending like crazy on AI, and I think that's one way their profits can get destroyed, because there's no really, I don't see the return from AI being anything great. So let these guys go spend all this surplus capital on AI, and that will help, hopefully undermine these companies.
So Kamath, that's interesting, because I thought this is actually one place where the big tech is actually innovating. I mean, if they can't innovate themselves, they're buying, but they are.
But I think that control is what I'm really against, which is the fact that, and I think that what is the weak link which could cause AI to be undermined? It's these companies have been earning supernormal profits.
Right.
Something needs to be done to undermine these supernormal profits, because with those profits, they are like misusing it for lots of other activities.
Right. And they themselves will probably create their own downfall, because like governments, they also become too big.
Yes.
Which they ought not to have. Somebody was mentioning to me, I think it was Bharat, that guess the number of people that Telegram has working for them. He says it's 19 people. 900 million subscribers and 19 people running the thing. Now, if that sort of efficiency, how does an incumbent really compete? That's the point that in a way you are making, that advent of technology will create its own challenges for these very large incumbents.
Yes.
And they will have to self-correct or face a zombie status and get driven out. I want to move on to another fascinating story that you have sketched. That is Switzerland versus other European socialist states.
Yes.
I think I'm sure our guests would love to hear that, and what differentiates and how that differentiation happened. And then of course, there are some other stories, but first the European story.
Yeah. So I have a chapter in the book on, where capitalism is still working, and I start with the example of Switzerland, which I've spent some time in. I said, how is Switzerland the world's richest economy? It's the world's richest economy by per capita income. And how is Switzerland also among the 5 happiest countries in the world, right? Because in the end, what do you want to be rich for? You want to be happy. So how do you be both rich and happy? And I cite the example of Switzerland, which is that their government spending as a share of GDP is much lower than other European countries. So the state is present. I'm not in favor of laissez-faire capitalism where there's no state. That's not practical. The state is present, but their government spending as a share of GDP is 35% lower than even America. So, and it's a very decentralized model. If you go to Switzerland, every canton in Switzerland does its own thing. So, and the regulatory environment is much lighter. So what I've tried to sketch in the book, I've said there are 3 countries where offer good examples of where capitalism is at least moving in the right direction. It's Switzerland, it's Taiwan is the other country I speak about, 3 countries across the income curve. It's a middle income country. And then I speak about Vietnam going the China way of the 80s and 90s and stuff like that. And Taiwan is an interesting example, because here is a country which was praised in the pandemic for being this great efficient state, handled the pandemic so well. Their government spending as a share of GDP is just 20%, half that of America. So I'm trying to say that the idea here is that you have to build a state for the 21st century which can be very tech savvy, and you don't have to keep on spending money to just get the results. France spends 60% of GDP, and yet if you go to France, it's one of the most inefficient states you'll deal with. Like Switzerland does 35%, and Taiwan does 20%, and the outcomes are much better.
Yeah, I want to segue a little bit from the book to maybe because you mentioned about China and what has happened and what lessons the recent events in China. Because you said you have been tracking it for quite some time and seen maybe getting out of control. But what are the recent things? The debt that is spiraling out of control, frankly. But the whole growth story, what lessons can we learn from it as to what not to do and what to do?
Well, what to do I've already outlined, which we will never do, right? So that's a different issue. But what not to do, I think, on China is the fact that China took on massive amounts of debt to try and sustain its growth rate in the last 5 or 10 years. So I'd say that in terms of, if there's one predictor of crises or stuff, is when a country takes on too much debt over a short span of time. China did that. And the second thing that in China's favor, as you know, was its population growth for a long period of time. But now, for the first time, China's population is actually shrinking, right? That's a huge development. No country in the history of development has grown at a rate of more than 2% even when their population is shrinking. So debt and demographics, I think, are two things which have become and under Xi Jinping now, they're reversing their policy of letting the private sector run. He's now become much more controlling of the private sector, which is leading to lots of uncertainty as well. Private investment is very uncertain, and the highest number of millionaires leaving a country in the world today is China. China is just seeing a massive out-migration today of millionaires leaving the country today. So if your own people are leaving your country, that's not a great statement about how things are.
So for us, probably the message that you're saying is keep government debt under control, and the rest of it, to the extent you can, do what you can. Just wanted to explore one thought there, that during its growth phase, it is 2000, 2015, there was so much to do, and they did that. Apart from building that manufacturing enterprise, as it were, or powerhouse. Now, we have yet to build that manufacturing powerhouse, particularly export-oriented. But the rest of it, so much to do exists here today, starting with urban rejuvenation or rural rejuvenation, getting on to all bits and pieces of infrastructure. Everything needs to be scaled up probably 6x, 7x. So it gives you a long runway.
Yes.
How will that play into our own growth path? And the 6% to me then becomes a little easier, because we have got all these things to do, rather than end up building bridges to nowhere and roads to nowhere.
Absolutely. So I think that as far as India is concerned, I don't think oversupply is a problem, which is the fact that there's so much more we can do, and because of our low base is why we're growing very rapidly. And that's one thing which I want to put in perspective, that when it comes to our GDP ranking in the world, we're very proud of number 5, but in per capita income terms, we're still 130 in the world. So from a low per capita income, you can grow much more quickly theoretically, because as you said, there's so much low-hanging fruit for us to still pick on. Issue is the fact that how much are we willing to pick on, how much will our polity allow us to do that? And so therefore, I think that hopefully these things will happen, and therefore we'll get 6 or even 7%. But the one biggest pitfall of emerging markets, of countries in general, is when we take it for granted. We can't take it for granted that even 6% is going to happen no matter what we do. That for me is like a real issue that we have, because so many countries in the world I've seen take their growth for granted. I mean, one of my favorite columns of this year that I wrote was on the list of breakdown nations. I've written about breakout nations in the past, breakdown nations. These are countries which were until very recently hailed as the big economic success stories, and just completely fell apart. And I included both in developed and in emerging markets. The weakest country in Europe today is Germany. Till even 4 or 5 years ago, we were all citing Germany as this great, manufacturing hub, and what they were doing right under Merkel and stuff like that. Now it's become once again the sick person of Europe. And in the developed world, and a lot of Indians will be happy to hear this, the weakest country in terms of per capita income growth over the last decade has been Canada. So in terms of how they have done. So I'd say that these are, and again, Canada was hailed after the 2008 financial crisis as one country which had a great banking sector that never suffered from it. all complacency. In emerging markets, Thailand, one point in time we used to cite Thailand as the big East Asian economic success story. Gone in terms of where it is today. So we can't take it for granted even 6-7% and think that we have so much to do. Let's first keep doing stuff to make sure that we fulfill this. I do feel we'll do it, but we can't take it for granted.
I read something that you wrote maybe and pointed out, maybe a couple of years back, the contribution of digital to China's GDP in the mix. I think you said it went very rapidly from mid-teens to 35% or so, or slightly higher than 35%.
Yes.
Do you see something similar happening here?
Yes.
With everything that we see around. And that should then provide some degree of stability to growth?
Absolutely. So in India, I think digitization is a big thing. Even on our election travels that we have gone, we have seen the way that that old Rajiv Gandhi statement that only 15 paisa reaches the end person. I think there's a material change in that. Because of digitization and stuff, I feel the welfare benefits are reaching. So you can again, in terms of give a lot more, you can do welfare and get better results without spending too much more. So there's no doubt that digitization is a big story in India. It's a big growth driver, and it's a big sort of, for the end beneficiary as well. So it's increased our efficiency a lot. Absolutely agree with that.
Ruchir, I think one last question, then we get the rapid fire, and then we got a lovely audience, a really awesome crowd here, so we want to get to them as well. The one thing I thought the book didn't have, maybe to spend enough time on, was age, right? How much is age a factor to how people are thinking about what they want and what they don't want? I think last I checked, about 10 years ago, the average viewership age of CNN, Uday Shankar is here, you might correct me if I'm going too wrong. The average age of the viewer of CNN is 60 plus. Now, I don't think it's a coincidence that you had a situation where you had, the top job in America being contested by, two very old white men.
Yeah.
In India, if you come and translate sort of, youth in India and sort of that demographic, 650 million people under the age of 35, 800 million people under the age of 40. What is your pitch to them? What is your pitch to them to say fight for capitalism, right? Because, how do you expect somebody, who's maybe just thinking about which stream to choose for college, how do you expect that person to not feel scared and insecure about walking in and getting a job at Google? He never knows when he's going to get disrupted. He doesn't know what kind of exposure, education, talent that he needs to kind of, not end up in that 15% that gets booted out every year at Google. Why should he not say, look, I need that government, I want that government job, I want some stability, I want some job stability. What's your pitch to him that this free market capitalism is the best way for you?
Because, look at the alternative in terms of what we lived through. We lived through the alternative system in the 70s and 80s. The good thing about emerging markets, I feel, including like India, is that that memory is still relatively fresh. America never experienced what socialism is like. So they can therefore romanticize about socialism. Appears like a very good concept, right? Which is the fact that, in terms of that, I'd love to have protection, I'd love to know I'm going to earn that much. But that is the good thing in India, I feel, and many emerging markets, that there is no constituency here for saying we need to go back to that, because that memory is still very fresh. So that's why I wanted to write this book. It's in a way an ode to capitalism. And it's in a way of sort of saying that it's getting a bad name in the West today because of the massive distortions that's been caused. But we in India today, and that's where the book begins, have gone through a socialist past. We have lived through it. We do not want to go back to that. And I think most people, I know that some people won't even remember because the population is moving so quickly, as you say, to becoming younger. We still have memories of that. I don't think we're going to take kindly to curbs on our freedom. There. And, just going back to even our election trips that we just did, one thing which I found so revealing in all our travels, which we did, was the number of people who felt, why did they vote this way, was also not because they had anything particular against the government, but this feeling that, this is getting too one-sided. Ye bahut ek tarafa ho gaya hai. We want a balance to be restored. And I think that that's really, who we are as Indians, that at the end of the day, we may want the government to help us and do this and all that, but at the end of the day, we know the government really can't deliver much for us. the quality of the government schools, the quality of the government hospitals. People see that every day. You give them private sector alternatives, that's where people really want to go.
Okay, Ruchir, rapid fire. You've done this before. Have fun with it. And it might be a little repetitive, so keep the answers short because this segment goes for a different medium. Okay, democracy or no democracy, what works better for capitalism?
Like for me,
What works better for capitalism?
I'd say that at the early stages, it's about possibly less democracy. At the later stages, more democracy of development.
Okay. Ambani, Adani, Tata, Birla. As a foreign investor, which conglomerate is the best model flag bearer of capitalism in India?
I mean, how do you distinguish them, right? Because I'd say that they're all big businesses. So, in terms of very hard to distinguish one for the other, the biggest flag bearer for capitalism in India is this, which is the fact that most billionaires which were on the list 10 years ago, today, most are new billionaires. We have 200 billionaires in the country today. These people get the maximum attention. But the people who don't get the attention is the fact that India has created the maximum number of new billionaires in the world. For me, that is the flag bearer of capitalism.
Super, super. Okay. Modi Trump or Modi Kamla, which is better for India?
I don't think it matters. Really, it doesn't. Because I feel the fact that for what happens like in the US election as well, because I feel that we are seen as the anti-China.
Okay.
So both parties sort of, will view us in a similar way.
Modi Trump or Modi Kamla, which is better for capitalism globally?
My whole book says that this is a bipartisan destruction of capitalism by both parties in America. So, in terms of that's really what I make the case for.
Okay. Modi Trump, Modi Kamla, which is better for democracy globally?
That's a great point. I mean, in terms of that, I think that, but even I'm split a bit because I'll be honest with you, which is that my politics and economics are a bit different. On the politics, I tend to be much more, for the want of a better word, a bit more liberal. On the economics, I tend to be much more right of the center. So, in terms of very hard for me to answer this because of the conflict I have there.
Okay, I'll let you get away with that. Is it good or bad for capitalism to break up big tech?
At present, it's good.
Okay. Is it good or bad for democracy to break up big tech?
It's good.
Facebook Inc., Google Inc., or the US Congress, who does the American citizen trust more?
At this stage, it's a very close race to the bottom, but definitely the US Congress is the least.
Okay. One thing American capitalism needs to learn from Indian capitalism.
I think from Indian capitalism, in terms of the fact that it needs to learn that what socialism was like in this country in the 70s and 80s.
Okay.
Before sort of yearning for that.
Yeah. And one thing Indian capitalism needs to learn from American capitalism.
Keep policy to be pro-competition, not pro-business.
Okay. An example where capitalism is eroding democracy.
Capitalism is?
Eroding democracies, is encroaching on democracies, capitalism is eating into democracy space.
I don't see nothing comes into my space in terms of
So let me tell you where I was trying to go with this.
Yeah, tell us.
Successively from, I think, when I was in college, in 2008, 2008 to 2014, American Supreme Court has consistently held that how much any corporate or even union or worker union can donate to a political party, there can be no limit to that. So if a corporation is losing whatever $10 million, they can still completely legitimately donate multiples of that loss amount to a political party. Now, forget inflation. If you look at inflation, if you look at the last 15 years, the amount of money going into these super PACs in UK and US has grown at multiples of the rate of inflation.
Yes.
So, we can't be naive and say this is all just sort of, altruistic. It's obviously there's some level of involvement between corporate. Is that something that, sort of is undemocratic in a way, but is capitalistic or,
Yeah, but I personally feel, and I've seen this like in India too, that the role of money is a bit overestimated in democracy.
I'm surprised you're saying that because we saw.
I know, but did it make a difference to the outcome?
But it just raised the bar. It raised the
think-
bar of corruption.
Yes, it does it, but I feel it's overestimated because if money won you elections, all incumbents would win elections. They have more money. They are,
Very interesting.
even in this
Very
election,
interesting.
the incumbent outspent the other parties by a factor of 5 or 10.
And they won. But yeah.
Well, is it? Yeah, we can debate that,
No,
whether it's
sure,
really one.
sure.
Yeah.
No, that's interesting. But just to bring out that,
Yeah.
I was shocked. We saw in Andhra, we saw
Yeah.
the numbers going into 100 crores per seat, what the numbers
I know
we
it's
were
become
learning.
commodit's though, right? So
Yeah.
it's like it doesn't make a difference.
Yes, everybody's
Yeah.
paying 100.
Everyone's
That's fine.
spending.
Okay, great. Okay, sorry. Okay, back to rapid fire. Which industry or sector in India is in most urgent need of government intervention?
I mean, the less the intervention, the better is my whole sort of thing. But as I said, that I don't think I want more government anywhere because every time the best growth happens when the ministry isn't even been formed.
Okay. Okay.
Happened with tech, right?
Okay. How long before India's demographic dividend turns to a liability?
It's already sort of, our demographic growth is already sort of in the area now where it's a bit, at levels which does not support very high growth. The good thing here is that our labor force participation rates are so low that we have ample scope to do that. But there are enough parts of India now where the demographics are no longer supportive of very high economic growth, particularly, but the good thing is that the labor force participation, especially the female participation in the labor force, is still very low.
Okay. Which large capitalist economy country is likely to cut rates before the US Fed does?
It's the central banker of the world. So until the US cuts rates,
Nobody will move?
It's very difficult to. But good thing is that some emerging markets have already begun to cut rates. Philippines did it and stuff. So tells you the fact that there are some early signs that it's happening.
The future of the US dollar in one word.
Down.
Your short impression of the last Hindenburg revelations.
I mean, I think the market's given its answer. It's like moved on.
Your answer.
No, but I feel like it's moved on, right?
Okay.
Which is the fact that it's that old thing that you can't keep taking the same news to the newsroom every day.
Okay, fair. Okay, short game. Game is called recession, recovery, or rocking. I'll say the country name. You say whether it's in recession, recovery, or rocking.
Okay.
US?
Currently, it's still doing okay, but I think that recession is the next turn.
Okay, UK?
It's been surprisingly resilient, compared to what I would expect it to be.
Poland?
I think Poland is going to be the next developed country,
Japan?
like in terms of sideways.
Okay, China?
China's clearly like in recession, kind of more, by its own very high standards.
Bangladesh?
In terms of like it sort of shot itself in the foot as well. But it's like hard to count it out, but yeah.
India?
India, in terms of on a relative basis, we are doing very well.
Brazil?
So rocking. Brazil is also sort of middling.
Vietnam?
It's doing very well. Rocking.
Australia?
Middling.
Malaysia?
It's really benefited from the AI boom. So like a lot of the data centers, other things, they're all moving to Malaysia a lot.
Okay, Korea?
It's also doing well, but only one sector, tech. The domestic economy in Korea, boring.
Okay. Top 3 countries that are a good buy today.
I think that when I look around the world today, apart from India, which in terms of the stuff, I would say that the biggest comeback nation is Greece. It had a crisis. It's been the big comeback nation. I still like it. Poland, I've told you, I still feel it becomes the next developed country. And Southeast Asia, whether it's Indonesia, Vietnam, I feel that they're all good stories. So, these are the top 3, I'd say.
Okay, the market regulator or the central banker, whose job is more important for the health of capitalism?
I think that central bankers have done more damage than market regulators have done.
Okay. Who has a tougher job in India? The SEBI chair or the governor of RBI?
Good question. I'd say that in terms of the fact is that, the RBI, I think, has become quite institutionalized. I think SEBI is still sort of at that phase where it needs much more, power in terms of what it needs to do. So I'd say currently that's the tougher job.
The RBI governor who best protected Indian capitalism, according to you?
My favorite RBI governor was someone I'm biased by, but I think was Dr. Reddy.
Okay. and the Fed chair who best protected American capitalism.
Paul Volcker.
Paul Volcker. Super. Okay, thank you, Ruchir. Thanks for playing the game.
Thank you.
Fun.
Yeah.
Okay. We have an awesome audience here. So please, we'll get some mics out there, and Ruchir has very kindly agreed to stay back and sign a few books. So please do hang out. Can we get a show of hands? Who all have a sense of? Yes. Okay. Let's start with Yatin, Tavleen. Yes, please.
In the past 10 years, what have you been really surprised and pleased by, and what has disappointed you economically?
Yeah. So I'd say in terms of what's surprised me is what I said, which is the fact that the government shifted the focus like away from too much populism and welfareism in terms of an infrastructure. My biggest disappointment has been the fact that when Modi first came to power, he'd speak about competitive federalism a lot, about giving states more power, becoming decentralized, because he almost did that. And in the end, I think that he's made it too centralized as a model that he's run. So that's been my biggest disappointment.
Mic behind, Yatin, gentleman in front of them.
Hi, my name is Yatin. You said dollar down. So if not dollar, where do we go?
As I said, there are plenty of emerging market currencies to choose from. I still like gold, but I'd say that whole bunch of emerging market currencies to choose from. I even feel that the euro is going to strengthen against the dollar.
Ruchir, can I say what Larry Summers told us at Adda last year? Very, very funny line he said. He said, look, the dollar's got its problems, but if you look everywhere else, Japan's a nursing home, China's a jail, Europe's a museum. So where do you go?
I know, but I'd say that, like this is the complacent attitude of Americans today,
okay.
Which is that no matter what we do, the rest of the world is worse.
Right.
I think that the nature abhors a vacuum. It'll find alternatives.
Okay, super. The gentleman in front, please. Yeah. Sorry. Yes.
Yeah, hi. Ruchir, the question is with respect to China plus one. And there's a lot of talk about, the Prime Minister marketing the country, bringing investment back here. And if you read the media here, you would think all of that China plus one is coming here. But in your experience, you invest across emerging markets. Who's really competing with India on the China plus one?
Well, the biggest beneficiary, if you just go by the data, has been Vietnam. After, so we have got some share, but the biggest beneficiaries have been, like I say, Southeast Asia, and then Mexico after that. Those have been the two biggest beneficiaries as per the data. So in terms of it, and as you know, our foreign investment as a share of the economy is still ambling along at 1% or so. Those countries are getting 3 to 4% of FDI as a share of the GDP.
Thanks.
Mr. Luthra here. Yes.
Thanks, Ruchir. This side.
Okay.
I'm Vice Admiral Girish Luthra. Your book on why capitalism has failed or is failing, brings back, this debate is not new, as you know. For almost 150 years, this has been, and Karl Marx wrote about how capitalism can fail. And his works included a lot of what you are saying in your book, although he's been criticized for a number of things, but rise of monopolies, rise of inequality, growth in wages not keeping up pace with growth in profits. The capitalist societies adjusted, adapted in many ways, brought in many, as you mentioned, many aspects of socialism into them, minimum wage, public health, public housing, many things were brought in by them. But there was one point about value of labor versus value of capital. That has again been debated every 20, 25 years. And the US now, and my question is specific to the US. There was this feeling, and you talked about people in America thinking about this, that there has been too much focus on, or too much primacy given to value of capital as against value of labor. And subsequently with labor also, with loss of jobs, etc., and shifting everything to China, all this also added to that problem of value of labor. In the last few years, they are trying to course correct through new industrial policy, through innovation policy, through focus on critical technology to bring back some of the industrial production back into the US. Do you think the new policies, which are part of US-China competition, but part also to focus on the value of labor, do you think that is going to help the US as far as capitalism part is concerned? Let me just add one more small little question, since you also talked about economic sanctions. In this, my question on that is, and you referred to Ukraine and Russia-Ukraine war. The war is, three components: military operations, economic sanctions, and the aid, economic aid. The economic sanctions, as you rightly pointed out, has backfired in many ways. But there is a special office in the US on economic sanctions. Do you think US is going to reconsider the concept of economic sanctions, given the pushback that it has received? So one, economic sanctions, will there be a rethink? And first one is industrial policy that they have adjusted.
Yeah, so I mean, just to answer, my whole point in the book is that capitalism did not fail, it was ruined. And it was ruined by government. So I don't feel the solution for capitalism today is more government. And so I'm not a fan of industrial policy. I think there are lots of countries which have tried industrial policy, just like authoritarian regimes. For every one country which succeeds, there are 5 which have failed with it. So I'm not a fan of that. The second point is on sanctions. Will the US backtrack? No. In fact, over time, the number of sanctions the US has been imposing around the world keeps on increasing. So unless they feel any consequence of that, I don't feel there'll be any pushback to that.
Okay, we get a question from Kuldeep, and then I'm going to put both Prasunji and Shobhaji on the spot if they don't mind, because they're never short of... Oh, Rajivji also is here, lovely. So we've got 3 questions in the first row. Yes?
Thanks, Anand, for getting the 2 legends on the stage together.
Yes.
Ruchir, do you think democracy is a necessary condition for capitalism? Because otherwise what you get is crony capitalism. And if you don't mind, for Mr. Kamath, there is a lot of concern on deposit mobilization. So your thoughts and how would you handle it, since you have been on the hot seat for a long time? Thank you.
Yeah, so I'd say that, I'll just answer my question, which is the fact that I feel that democracy and capitalism, in the end of the day, are soulmates which meet at a particular per capita income. So I'd say that both of them go hand in hand after a particular point in time. That's what I've sort of said here in the whole thing. So I don't feel that the two are contradictory, but in the initial stages, most countries which have been successful have given more capitalism and then moved to democracy. But eventually around the world, they both go hand in hand, and anyone who hasn't done that has been an exception.
Yeah, I would think that it's a cycle in a way. Deposit mobilization is slow because other asset classes are giving a perceived higher return. When it evens out, it's going to be back to deposit. So this is a cycle. I wouldn't be too worried about it.
Yeah. First, my compliments on the way you've written the book. I think I could go through it, and economics book really scared me. It is... So is it that your trips around the country have made you more lucid and more of a communicator than an economist now? As a communicator, I feel that it was very friendly, the way it is storytelling. Or your interest in films, which I know about, has made you kind of write a screenplay in this case. So it's an economic screenplay that you've written. One thing is that. Second thing is a very small question that I don't know where to... who protects the murmurs in that absolute capitalism which you talk about? You lament the loss of it and the brutal, economic reforms of China you refer to. So who protects the murmurs? Where is compassion and who funds the compassion?
Yeah. So firstly, Prasoon, thanks so much for your... It means a lot to me coming from you. So thank you very much for the thing, and hopefully everyone here is listening and will buy a copy. But I'd say your second point about the fact is that I'm not in favor of ruthless capitalism or the laissez-faire capitalism, what we call the Dixonian capitalism of the 19th century. I think it's impractical. All I'm trying to say is that the role of the state today has increased so much, which is that it's distorting the outcome. So I agree with you that we cannot have laissez-faire capitalism anymore. That went out of the window with the Great Depression. So we will always have to have some compassionate capitalism, welfare and stuff. It's about the fact that making people understand that you have limited resources, and what do you spend on? Do you spend first on building the roads and bridges so we empower the people? Or do you believe in sort of spending that money on just, in terms of just saying that, okay, you can sit home and you can earn this much if you don't have a job and it's all fine. So I think the balance is what I'm talking about getting restored. We have gone from one extreme 100 years ago, which was ruthless capitalism in the West as well, to an extent now where today everyone deserves a bailout. Everyone deserves a sort of, like a rescue package. It's that what I really lament.
Rajiv ji?
Yeah. Ruchir, I think in 2016, you were the first person to flag off this issue of entrepreneurs leaving the country at the FICCI, annual convention. Now, after that, in last 8 years, almost 200,000 or maybe 300,000 people, entrepreneurs, they have left the country. What is your take on it? Because it's a precious loss. Secondly, there's a perception is being built that country has only grown after 2014 and there was no economic development before that. So I want your, observation on that also.
Well, I think that we know, Rajiv, very well that India's growth started to accelerate from the 1980s. And the 1991, I think that whatever perception is, most people understand that 1991 was a watershed moment for India. After that, the thing began. The thing which I feel bad about, which we have spoken about, is that the second term of the UP in particular, something went wrong. And that's what I think we can't escape from. That's what set the conditions for 2014 to, in terms of happen. But I think that India's economic trajectory, India, when it got its independence in 1947, was among the world's 10 largest economies. As a map, it slipped right up until the 1980s. From 1991, we have been on a constant upward trajectory. We have had some ups and downs, but we've been on an upward trajectory. That's what the data shows, and we can't argue against that. The first point, which I said even back then, is that we still have a lot of work to do to improve the situation on the ground for the person. As I said, that on macroeconomic, we can get all inflation's fine, fiscal is fine and stuff. It's still a very tough country to do business in, and that's what I've spoken about in the past too, that the micro reforms are still very difficult. And I don't want to go on because I've already been told, I've spoken enough about this, I did last time too, that when you give so much power to the bureaucrats, the investigative agencies and stuff, the amount of harassment that the average person faces is huge. And that, I think, has been a major factor in people moving out of this country.
Ruchir, just one brief question. Will India get rich first or get old first?
I think neither in my lifetime. Because people have asked me this question, our per capita income is still $3,000. I think that it's going to take a long time before we get rich. But so in my lifetime, and also old means what? I don't know. But I'd say that that's a problem for China, not for India.
Shobhaji?
Ruchir, thank you for that wonderful, wonderful marathon. Most of it went over my head. But
is that a compliment or what?
Mixed. I wish it could have been simplified for someone as dumb as I am. But the question I want to ask you is this. It seems like an impossibility at this stage. If Rahul Gandhi were to lead the government at any stage, would he be a liability or would he be an asset to India?
I don't have an answer to that because as I said that as I told even here, Shobha, that what they say when they're out of power and when they're in power is so different. I've documented in my books as well that when we first met him and stuff, and all that, as a group, we were generally underwhelmed. This is back in 2007 and stuff.
Underwhelmed?
Yes, absolutely. In terms of, and I've charted that out, that, in terms of what the journey was and all that. In the last few months, I'm hearing this narrative that he's changed a lot, all this has happened and stuff. I can't distinguish as yet, is this because India just wants something new and so therefore they're saying this, or has he genuinely changed? I just don't have a reading of that. But, in terms of, so that is what I can't, seem to fathom. I think what's happening in India today, if I can say for my travels, is that there's a general fatigue. Someone's been in power for a long period of time, people want something new. And so therefore they gravitate.
But is he really new, Ruchir? He's been around for the longest time.
That's right. But, he hasn't been in power. So people just sort of, have a curiosity. The question you've asked, even I don't know. So there's a newness element to it in terms of that. Even I don't know whether he's genuinely changed or is this just people wanting something different.
Appealing to the young of India, the most important demographic, do you think he succeeded in appealing to them and maybe providing a counter narrative for the future?
Yeah, but I'd say that in terms of it's happening across many states' chief ministers. Like, as I've said so in the past, that, like we here in Delhi and Bombay, if I can say so, focus too much on central leaders. But, when we travel, you see the dynamism and stuff like that. Like one of the, one leader we have real fun meeting, even though his governance record is mixed, is someone like Akhilesh, right? I mean, I think so. Like in Bihar, Tejasvi. All these guys, in terms of that, you see a fresh energy in them as well. So but we tend to get very focused on central leaders. But in terms of even this election, I think the role Akhilesh played was possibly the most monumental role.
So federal system maybe down the line?
Absolutely. I'm a huge believer in that given our polity and given so if you look at other countries in the world as well, they all tend to be, in terms of who have done, heterogeneous societies need more federal systems.
Thank you. Thanks so much.
You'll have to why do you think Akhilesh played a monumental role in this election?
No, because of the fact that what happened in UP. I think it's like there to say that had UP sort of gone, like 20, 30 seats, like in terms of the fact that for some reason, even when we went to UP in like 2022, we saw that he was being able to connect much more with the people. The kind of crowds we saw at his rally and the frenzy we saw, we have not seen in other rallies that we saw. In fact, it misled us a bit in 2022 because we thought that he'd do better than he actually did. So in terms of the fact that there are other leaders who have played a very significant role, we tend to get very focused on what's happening at the center.
Yes, please, Mr. Govt.
Ruchir, if you were to be appointed advisor to the Prime Minister of India, Narendra Modi, or made the chairman of the Economic Advisory Committee, what would you advise him to improve India's economy from where it is today? What basic tenets would you advise him?
I will never
I'm
be
not
in
saying whether
government.
he listened or not, but what would you advise?
I will never be in government because I'm very anti-government.
But
if I can say so,
we just made you play the role of government.
Yeah, but I'd say that for me, it's one simple concept: give people as much economic freedom as possible. So which is the whole idea that how do you still today, we rank in the world on the index of economic freedom, we still rank above 100.
Okay.
How do we get to 50? Yeah. In terms of that. What do we have to do to give our people more economic freedom? Yeah. For me, that's the single biggest driver.
And to the leader of the opposition.
Well, leader of opposition is the fact that please see what your own, state chief ministers are doing and let's reconcile the two.
Okay.
There's a last question there, and then I think we'll have to wrap up. Yeah. Okay, while the mic gets there, I'll ask one question before the mic gets there. Just once. You've written this book, and it's a great, how much do you believe that what you want to happen in this book will actually happen?
My experience is that unless you get a crisis, change doesn't take place in a big way. India saw that in 1991. Recently, I mentioned Greece. I've talked about Sweden and stuff. So unless you get an outright crisis, nothing much gets changed. But what we can do for now is at least build this constituency. So I'm really happy. I mean, if you just go to the net and you read all the reviews of this book that various publications have written about, economic ones, the Wall Street Journal, the New York Times, etc., they've all said that for the first time we have a book which is making the opposite case.
Right.
So at least the fact that you put this argument out there and you back it up with data is a start.
But if it doesn't get taken, there's no crisis. Do you see us going to a new system like an oligarchism where
it's more of the same. It's more of the same then. You'll see
more concentration of power, more.
That's right. Like a bit more of like chipping away. A bit more of that just keeps going down the. I mean the ball keeps rolling down the same way.
Hi Ruchir, I've not read your book, but when you mention about the forex reserves and all, the Bretton Woods system had that you could print currency only if you had so much gold.
Yes.
So the answer is India currency has been weak. What if America devalues the dollar? Could that make a substantial impact on America coming back and the dollar reserves, which everybody is holding on to? That's why everybody's shifting to gold. So America could come back by devaluing the dollar?
I don't think America's going to actively devalue the dollar. I think the dollar is going to fall on its own. That's my sort of feeling. And if they devalue the dollar, it'll only happen if you have an outright crisis. So I'm not looking for a dollar. I think the dollar is going to slip on its own. It's not a controlled currency as such. So I don't feel that's going to happen, that you're going to get a devaluation. I think it's going to slip down on its own over time.
There's one last question there you have to take. Yeah.
Yeah, hi Ruchir, this is Bharat. I'm a strategist. Just like you talked about that in US property prices are increasing because of supply and demand imbalance, don't you think that is actually manifesting in Indian equity prices as well? Because growth has been strong, but if you look at over the last 7 years since this MFI classification has come up, your free float has grown at roughly 17%, but your domestic mutual fund AUM that has been growing at 27%. So that is roughly a 10 percentage point differential. So from your experience as strategist, you have seen that whenever such a massive difference between supply and demand usually comes up, then does the multiple inflates? Because growth was pretty strong even in, I would say, earlier times, but multiples never used to reach that level. Thank you.
Yeah, no, I think that's true, which is that in India, what we have seen is this incredible flow of domestic money, which has gone in the market, and that trend just seems to keep on continuing. I don't see as to how that trend comes, but what you're saying is true. That's why I said so even a year ago when we spoke that we have become the most expensive market in the world, because we got, like in terms of a good economic story, which has been superimposed with the amount of domestic money flow. I just don't know when this process ends, but you're correct in terms of the fact that it is something which has led to prices go very high out here. But I think that here the difference, as opposed to property prices going high, is that leads to a sense of people can't affording it. Here I think most people are, in this room at least, are very happy at the equity market boom.
Okay, super. Ruchir, thank you so much for a lovely evening. Mr. Kamath, I really, it's just such a pleasure to have a legend like you sharing this challenge with me. And thank you all for being here. We had a long 1.5 hours. Thank you and good luck. Good luck for the book. And just to remind everybody that Ruchir is going to hang out and kind of sign a few copies. So it's a good experience to have.
So good. Thanks so much for doing this. Thank you so much. Thank you.
Thank you, Anand, Mr. Kamath, for this fabulous session. I would now like to thank our partners, presenting partner Relige Enterprises Limited, co-presenting partner 3P Investment Managers FRR Immigration, associate partner Parul University, experienced partner Jolie's Club. Please stay back and join us for the cocktail. Also, Ruchir's books are on sale and he's signing them too.